Apple is pursuing one of the largest buybacks in American history. That will continue. They have never laid out any parameters for when they will buy, when they won't buy. They don't tell you it's a multiple of book value. They don't tell you it's anything in stone, but they will continue to buy. And so I think one of the largest buyers of the stock is still in place. Unfortunately, the other two drivers of buying that stock, we don't know if Berkshire Hathaway will continue to accumulate, and we don't know what flows will be to the S&P 500 and the Qs. And those two indices were responsible, in addition to Apple's own buybacks and Berkshire, for a lot of the buying pressure that kept the stock from breaking down for most of last year. We just don't know what the demand will be. And so until we have some clarity there, what's going to turn around the share price of Apple? The company's doing fine. What's going to turn around the share price? That's what we're here to discuss. And I have to tell you, I can't think of what the catalyst might be. It is not as though Apple's going to come out and try to advance the expectations on the street. They shouldn't. They should be conservative right now, like every other large cap publicly traded company, and they probably will be. And we're not getting results for Q4 for a while. So we're in this vacuum of information. I don't know who the incremental buyer is that comes in. And so until then, even if you're a diehard Apple shareholder, and I am and have been for more than a decade, accept the fact that it's not always going to be at new highs. Sometimes the stock's at new lows.
Steph, pick it up from there.
Yeah, I mean, you had asked about what multiple do you pay for this thing. It's growing total revenues and earnings low double digits. So you're paying 21 times forward estimates for low double digits revenues and earnings. It has outperformed the rest of FANG nicely, by the way, especially relative to Alphabet and especially relative to Meta. So it's held up. And so you see kind of it's held up now. It's kind of falling back, which is not too surprising because it is so over-owned, Scott. 80% of the sell side have buys on this thing. It was a stay-at-home beneficiary for a couple of years. You now have tough comparisons, right? So stay at home. What do I mean? iPads, Macs, apps all benefited from stay at home. So these tough comparisons are going to be a challenge for the company. I totally agree. This company has, world-class buyback program underway, $90 billion. And you've got Berkshire for sure. I own Berkshire, in full disclosure. It's my Apple Play. But I don't have any reason to own this just yet. Talk to me when it gets to about 15 or 16 times earnings.
Wow, so we still need some compression for the multiple, Joe. Is that how you see it as well?
Well, it's clearly one of the mega cap names that's part of this rolling valuation recession, and it's gone on since the fourth quarter of 2020. And now it's affecting names like Apple, names like Tesla. Tesla's having a terrible year in one day today. But for Apple, it is a stock that has lost its positive momentum. It did so in the first week of November. Quite candidly, the momentum has turned negative. If you're strictly paying attention to technical indicators, you could clearly see that. If you're sitting there and you are a non-discretionary rules-based fund, you're actually playing Apple from the short side. Now, Josh brings up a good point. They are a significant buyer of their own stock, but they're in a blackout window right now. They're not going to be buying their stock and stemming the decline right now. I would think on the other side of earnings, which would be the first 2 weeks of February, you could expect that they would make a return to buying back their stock, and maybe that stabilizes a lot of the selling intensity that's
present.
present.
Have kind of no man's land for a while other than sitting and watching it.
People try to make this more complex than it is. We don't know what the multiple will be when Apple stops going down. We could say what we think is like fair value, but that's a term from a textbook. That actually doesn't mean anything in real life. What will mean something is when the selling stops. And how will we know? Well, the first thing you need is a little bit of a consolidation where it stops making new lows. It's been making 52-week lows now for a while. The second thing you need to see is the intensity of the down days dissipate. You need to see RSI stabilize. You need to see a succession then of higher lows. So maybe the next time it has a sell-off, it doesn't break the June low again. We're so far away from that. So it doesn't mean like Apple's going to free fall to nothing. But if you're a buyer and you're someone that's like, oh, I've been waiting for Apple to get, okay, that's fine. Don't expect immediate gratification. There is nothing happening technically that tells us that we're done here. A stock below the June lows in the Dow is in very bad shape from an accumulation distribution standpoint. It's not It's not a bottom. I'm sorry. I wish it were. It's just obviously not.